guys again, and this is the second recording for the first subchapter, positive and negative divergences in trading. So we took a look at the negative divergence on the first recording, and now we're going to take a look at what a positive divergence is and what to look for. Now, of course, that we're going to take a look at the relative strength index, because the relative strength index is one of the most used oscillators for divergences. So let's take insert, then indicators, oscillators, and relative strength index. 30 and 70 level, click OK, and this is the default setting for the 14th period, for this oscillator. Now, when price is falling, so we are looking for pricing is falling, and the oscillator, in this case the relative strength index, to rise, this is being called a positive divergence, and traders under this premise are looking to establish long positions based on it. Okay? So we are looking for a price to fall. Let's take a look here. We're looking for price to fall and relative strength index to rise. This is still a 1 hour chart, and on the euro dollar. And this is the first instance that I came across. This is, as you can see, the oscillator is rising. You're looking on the left side on the screen under the data window, and under the data window here, the relative strength index starting from this point has a value of 26.32, and at this point has a value of 32.89. But if you're looking at the price here has a low of 130.37, and here has a low of 130.33. So price is falling, but the relative strength index is rising, and this is being called a positive divergence. Let's write there too, positive divergence. So this is a positive. So under a positive divergence, traders look to establish long positions. Okay, so long positions based on such a divergence. Now, normally, I told you that before. From my experience, price may stay in a positive divergence or a negative divergence, as a matter of fact, for a long time until reversing, and you might find yourself in a situation you don't want to be, because you're waiting for price to turn, and that turn actually don't come. So what I would do on such a situation, I will try to look for the relative strength index to go over the 40 level. So this is a positive divergence, but this kind of confirmation we're going to see mostly on the record is dedicated to the second subject of this talking about divergences. That is how to treat divergences when identified. Anyways, for the purpose of this recording, we are just identifying positive and negative divergences. This time is the positive divergence time, and the confirmation, normally I would wait for the 40 level on the relative strength index to be broken to the upside for us to have a confirmation. And if 30 then breaks the downside, then there is an invalidation level. So here you have the divergence, and you wait for confirmation, and this should be your confirmation when 40 level is broken to the upside, and then you are just trying to look for more upside to come. And as you can see here, the upside comes until the relative strength index, and you should stay on the long side until the relative strength index goes over the 70 again. Okay? So this is a positive divergence. Let's see if we can identify another positive divergence. Remember, positive divergence you have when price is falling and the oscillator is rising, and here it seems to be the case, because if you're looking at the oscillator here, here to here, the oscillator has a value of 39.78, and the low here is 40.48, and then rising, so 40.48. This is a rising trend for the relative strength index, but the low for price here is 129.89, and the low here is 129.90. So this is not a divergence. Sorry about that. Okay. So we are looking for price to fall, like in here, and the oscillator to rise. So oscillator to rise and price to fall, and this is being called a positive divergence. So positive divergence. So divergence between price and oscillator, okay? So positive divergence. Why? If you are looking at the relative strength index value from this low here, so every side has a value of 29.52, and here has a value of 51.45, so rising, and the price actually has a low here of 129.73 and the low here of 129.54. So price falling, relative strength index is rising, and there you go, you have a positive divergence, and we're looking for buyers to step in, and because of that we kind of needed a confirmation. Our confirmation is the relative strength index to stay above the 40, but this you'll see on the next chapter. And as you can see, the RSI stays above the 40. It even makes some bullish signals here. This is a nice hammer that you have. If you look on the hammer chapter on the candles, this is a nice hammer. And what you should do, you should stay on the long side until the relative strength index comes below 40 again. And here should be your below 40. So it goes from here, from the 130.10 up to the 130.93. So a nice, let's say a nice 80 pips based on this divergence. So we had two examples of positive divergence, one here being a positive divergence, and also one here being a positive divergence. What you should look for, you should look for price to fall, and oscillator, in this case relative strength index, to rise. So once again, divergences are one of the mostly used concepts by traders, regardless of what they are actually trading. So you can do this type, you can identify this type of divergences regardless of what you are trading: stocks, commodities, currencies, whatever. And I used the euro dollar. I used the euro dollar for this example. The euro dollar on the 1 hour chart on recent prices, so that you know that we can actually trade this kind of divergences. But you should be aware that price may have the tendency to stay in a divergence manner more than your account is available to is able to stand it. Okay. Now this is the end of the first subject regarding divergences. We've taken a look at positive and negative divergences, and it is time now for the next subchapter where I will have 4 different recordings, and under those 4 different recordings I will try to show you confirmation for divergences when using on the relative strength index. So two recordings with confirmation for divergences, one for the positive divergences and one for the negative divergences with confirmation, and the second and the third and the fourth with looking for divergences with another oscillator, the Denmark oscillator, and one with looking at divergences with an indicator, with a trending indicator. the CCI, to see if it is possible to have such a divergence regarding the CCI too. So until then, stay safe on the markets and trade good.